large cap, mid cap, and small cap. Can't decide where to invest? Flexi cap funds claim to solve this problem by giving your money exposure across all market caps. A new launch in this category is the wealth company Flexi Cap Fund. But should you consider it? Let us find out through an in-depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this fund, let us first understand a few basic details about it. So first, what is a Flexi Cap Fund? A Flexi Cap Fund is a diversified mutual fund that can invest across market capitalization without any restriction. So they give the fund manager full flexibility to shift investments depending on the market conditions, and performance depends a lot on how well the fund manager navigates the different phases of the market. So as an NFO, it opens on 24th September 2025 and closes on 8th October 2025. So this fund has the flexibility to invest in large, mid and small cap companies in any proportion. The idea is simple: capture stability from large caps, growth from mid caps and high potential from small caps, all under one fund. So some of the key features of this fund are: this is an open-ended fund type and it belongs to the category of equity flexi cap, and it has Nifty 500 TRI as its benchmark index, and there is an exit load of 1% for redemption within 30 days, and there is no entry load, and the minimum investment amount required is 1000 rupees. And also the fund managers for this fund are Ms. Aparna Shankar, Mr. Umesh Sharma and Mr. Varun Nanavati. So according to the riskometer, the risk involved in this fund is very high. The primary investment objective of this fund is that it seeks to provide long-term growth in capital and income to investors through active management of investments in a diversified portfolio of equity and equity-related securities across the entire market capitalization spectrum in debt and money market instruments. So now, as we have a basic idea about this fund, let us move on to the analysis part of the video, where we are going to take a look at the pros and cons of investing in this fund. So let's start with the pros, the advantages. Number one, you get exposure across large, mid and small caps, which helps to balance the risk and reward. And number two, you can shift allocations based on market conditions, reducing the downside risk. So there is flexibility for the fund manager. And number three, this is suitable for investors who don't want to manage multiple funds across market caps, because the fund manager will be handling it for them. And number four, a mix of stability and growth makes it suitable for wealth creation over time. So these are some of the advantages. However, some of the disadvantages are: number one, the returns depend heavily on how well the fund manager times and allocates across market caps. Number two, as this is a new fund offer, NFO, there is no past performance to evaluate. And number three, if you already hold large, mid or small cap funds, this could duplicate your portfolio exposure. And number four, flexi caps still invest in mid and small caps, which can be more volatile in the short term period. So what is the final takeaway then? Is investing in the wealth company Flexi Cap Fund worth it or not? So to sum it up, this fund offers diversification and flexibility under one roof. But since it is an NFO with no track record, it is important to compare with existing Flexi Cap funds that already have a history of performance. So always check if this aligns with your financial goals before making any investment decision. So our personal recommendation is that you can choose existing mutual funds that have track records for minimum of 7 to 10 years, where you will be able to see how it has performed in the highs and lows and be able to take a calculated risk instead of taking a blind risk, because here there is no proper portfolio and research. So investment here is risky. You can try the trial. If you have a surplus money, you can just try the trial with minimum investment in this fund through a satellite portfolio, but do not add funds to the core portfolio, because if it underperforms, it will definitely impact your overall portfolio. And also, if you do want a professional guidance, you can consult with a financial planner who will look into the suitability of this fund's investment objective, risk profile, overlap ratio and allocation, and help guide you towards better funds or even better strategies to help you achieve your financial goals in a much more easier and smarter way.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.